Hello and welcome to another episode of Tax Series from Pars Financials. My name is Arash Shahriari, an IRS enrolled agent, and this video is going to be a comprehensive guide on tax residency versus non-tax residency in the United States. Essentially, we'll be covering the differences between tax resident versus a non-tax resident and how we go about determining the tax residency versus non-tax residency in the United States and what are the exemptions are to the rules. And also I'll give some examples to try to clarify that. So whether you're a tax preparer or you just want to do your own taxes, the first step to get started in your taxes is to determine whether you're considered resident or non-tax resident for tax purposes. So what are the differences between a tax resident and a non-tax resident? The first one has to do with the global income taxation. So if you're a tax resident, you have to declare your international sources of income. But if you're a non-tax resident, you only declare your U.S. sources of income. The second one has to do with the tax rate. If you are a tax resident, you will be treated on a progressive rate, which goes up to 37% for highest earners. If you're a non-resident, depending on the type of the income you have, as they differ based on their type, you would be treated from a rate from starting from 10% to 30%. The third one has to do with the claimability of the standard deduction. So in case you don't know, the standard deduction is an amount that essentially you can waive from your income and not to make your income subject to taxation for that portion. For the single filers in 2023, that amount is $13,850, which is a substantial amount. Unfortunately, if you're a non-resident, you're not able to take that standard deduction. The fourth one has to do with the filing statuses. So for the most part, the filing statuses available to both residents and non-residents are the same. The only difference is that for non-residents, the marrying filing jointly status is not available. If you're a married non-resident, you have to file as married filing separately. The fifth one has to do with claiming the education credit. So unlike the residents, non-residents cannot take the education credits such as the American Opportunity Tax Credit and the Lifetime Learning Credit. The next one has to do with the claiming dependents. So unlike the tax residents, non-tax residents cannot claim the dependents. There are exceptions to this rule, and essentially the two criteria that has to be met is that number one, the taxpayer has to be the resident of Canada, Mexico, South Korea, or India who was a student or business apprentice. The other criteria is that the dependent that you're claiming on your taxes has to be a citizen, national, or resident of the United States, or a resident of Canada or Mexico. So in this part, we're gonna talk about who is considered a tax resident, and this is a test that determines if you're a tax resident or not. To first begin with, you have to understand one thing that really is important. Tax residency is not the same as immigration status. Just because you're in America and you have an immigration status, that doesn't make you a tax resident per se. There are three tests that IRS uses to try to determine if somebody is considered a U.S. tax resident. Number one is the citizenship test. So if you are either a naturalized or born United States citizen, you're always treated as a tax citizen on your worldwide income, no matter where in the world you live. So let's say you leave United States and go and live in another country, that doesn't make you exempt from filing your taxes. The second one is the green card test. You're considered a tax resident if you had a green card upon arrival in the US or were granted one at any time during the tax year. By the tax year, we mean the year that you're filing for. So if any time during the tax year you had a green card, or that year you arrived in the United States as a green card holder, you would be treated as a tax resident. The only exception or nuance here is that for the first year upon your arrival in the United States, the pre-date of your arrival income from international sources do not count. So essentially, if you have an international income for the first year, you would start counting those income after the date of your arrival in the United States. Now, speaking of the green card test, there's a lot of confusion over, losing the green card, which, in reflect would take away the tax residency. And there are only 3 scenarios that you would lose your tax residency as a green card holder. Number 1 is that if you voluntarily renounce and abandon the status in writing to the United States, USCIS. Second one is that your permanent resident status is administratively terminated by USCIS. Or the third one, your permanent resident status is judicially terminated by U.S. federal court. These are the only 3 scenarios. Some people think that just because they leave United States and go outside for like a year or more, that automatically takes away their tax residency. That's not the case. So the third test is called the substantial presence test, using number of days in US, and that itself breaks down into different segments. That is, there are 2 different tests that ultimately can determine under this substantial presence test if you're a tax resident. Number 1 is that if you're physically present in the United States on at least 183 days during the tax year. So if you minimum met that 183 days, you're automatically a tax resident and you can file as so. Now, maybe that's not exactly the case, but under the second segment, if you meet this 4 criteria that we're going to go over, you would be still treated as a tax resident. So let's say you're not present 183 days in the tax year, but you met the minimum 31-day present during the tax year, and then you will go ahead and count all the days you're present in the year prior to that and divide that by number 3, and then you go ahead and count all the days you're present the second year prior to the tax year and divide that number to 6 by 6, and then you go ahead and add all these numbers together. Once you add these numbers together, if the total equals or exceeds 183 days, you would still be considered a tax resident for that tax year. Now, we're going to go ahead and look at an example just to clarify. We have John, for example, here. He was physically present in the U.S. on 120 days in each of the years of 2021, 2022, and 2023. To determine if he meets the substantial present test for 2023 tax year, we go ahead and count the 120 full days of presence in 2023, and we also count the 40 days, which is the 1/3 of the 120 days for 2022, and we count the 20 days, which is 1/6 of the 120 days in 2021. So once we add all these numbers up, we'll arrive at the figure of 180. And since the total for the 3 tax year period is 180 days, John is still not considered a resident under the substantial present test for the tax year of 2023. Alright, I know this might make it a little complicated, but now that we covered the test that would make one person a tax resident in the United States, we have to know that there are exemptions to this rule that would still make someone a non-resident. So the first one are the foreign government individuals under variants of A or G visas, with the exceptions of A3 or G5 visa in the United States. So basically, let's say you're a foreign government individual and you were in US for more than 183 days. Even if you're under one of these qualifying A or G visas, you would be still considered a non-tax resident. The second one is the teachers or trainees under a J or Q visa who substantially comply with the requirements of their visa for the first 2 years. Now, this terminology, substantially complying with the requirements of the visa, is very important because it would make a difference and potentially would make you actually a tax resident. We're going to come back to this. The third one is the students under F, J, M, or Q visa who substantially comply with the requirements of their visa for the 5 years, for the first 5 years. The fourth one are the professional athletes temporarily in the United States to compete in a charitable sport event. Fifth one, has to do with the tax treaty, which would override the tax residency rules that we covered. Now, in case you don't know, there are countries that do have tax treaties with United States, and some of the stipulations in those tax treaties would potentially change the game. One of these, as an example, would be U.S.-Canadian tax treaty. The Article 4 of the Canadian U.S. tax treaty declares that the Canadian citizens with U.S. green card are treated as a non-tax resident. So this is something that you also want to consider. The sixth one has to do with the establishing closer connection to a foreign country. If you're able to prove that, and there's a form that you have to fill out for this, and a tax preparer typically can help you with this. If you can establish that, given your place of residence that you have, the bank accounts, possessions that you have, family, friends, or various other ties that you may have, mainly fall into another country of your residence, perhaps you may still be able to claim that you should be treated as a non-tax resident. The seventh one has to do with the establishing closer connection to a foreign country as a student. So this one is similar to the previous one. There's a slightly difference because you're a student, and because of that you're typically under the FJ visa, but in this scenario you probably have gone above the 5 years, but you're able to still argue that you should be treated as a non-resident. The last one has to do with the crew members on a transport vessel who don't engage in a trade or business in the United States. So let's say you're on a transport vessel, or you're an air hostess, essentially are traveling to US simply as part of your job. That doesn't make you a tax resident just because you were here more than 183 days. Now, going back to the terminology that I spoke of, substantially complying with the term of the visa. Let's say if you're a teacher on a J or F visa, and you happen to basically not get paid on time, for example, that's one scenario that essentially makes you not complying with the terms of visa, whether that is on your part or the part of your sponsor or the employer that you're working for, and that will exit you from the exemption that we mentioned, and you would be considered a tax resident if you were present in US for 183 days or more. The same applies for the students on the F1 visa, for instance. So let's say if they had a gap in their immigration status, or they held a job outside the campus for the first year, or they worked more than the minimum hours or the maximum hours that was permitted under the terms of their visa, that would be also the similar scenario where they would exit and would be considered tax residents under the substantial present test. The next scenario is that if you, let's say you are on a F1 visa, or basically one of the visas that makes you an exempt, but you switch over to an immigration status such as a green card. In that scenario, as we said, you automatically in that tax year would be considered a tax resident. Now, just one quick reference that I want to make is that just applying in a given year for a green card or another immigration status doesn't necessarily make you a tax resident, but once you're granted by USCIS, that's the timing that you have to consider that now on you would be considered a tax resident. Now, the other scenario is that under section 6013G of the Internal Revenue Code, let's say you're a tax resident US, but you have a foreign spouse that, matter of fact, has never been in US, but you're allowed under this section to file a married filing joint with the foreign spouse, and essentially be qualified to all the elements that come along with taking advantage of the tax resident status. Alright, so that brings us to the end of the video. I hope this video was helpful. If you found it helpful and you think someone else can also take benefit of it, please go ahead and share it with them. Also, don't forget to subscribe and hit the like button, comment. I would appreciate all that. And let me know if you have any other questions and you want me to make video on a different subject. I'll be more than happy to assist. Till next time, have a great time.